Welcome to the Common Sense Investing, or CSI Show, with Victor McClure and Guy Allard from McClure Capital Wealth Management Companies. Victor and Guy will use their combined 60-plus years of experience to answer your financial questions with their own brand of plain-spoken language and hard-hitting style.
Welcome to the Common Sense Investing Show. I'm Victor McClure. I'm your host and the president of the McClure Capital Wealth Management Companies. Guy, are you here, Guy?
Hello, one and all. I am here.
That's right. Still suffering the effects of that farming accident. His voice is a little higher than normal. But that's Sarah Meyer, my executive assistant. She's filling in for Guy because he is a little ill, but he'll be back next week. We wish him a speedy recovery. Mm-hmm.
I'm going to try to fill in for him. He's got some pretty big shoes.
He's got a big voice for sure, right?
Definitely a big voice. Big sneeze, tall guy. Guy's just big. Guy is Guy.
He's a large person. We're doing videos for our website here. And I have never seen a human. Now, we've been speaking in public for a living for 30-something years each. I've never seen somebody get that nervous before doing it. Every time. I was watching some weird show about Ozzy Osbourne. He still gets all kinds of jitters. He's like 80 years old now. Been on tour for 50 years, but I'll go, because this never really bothered me, you know.
Right.
I threw my back out, took 4 Vicodin, and did a KRLD seminar with like 800 people in it. It was kind of fun.
But tell them how you hurt your back, please.
Well, I took on 3 muggers that were trying to take down a lady that I broke in to try to. Now I realize I was petting my dog.
Yeah.
I leaned over, pet my dog, and couldn't move. Yeah. and I knew I was doing it was a KRLD Manage Your Money seminar, and I think it was either Airport One or downtown or whatever, and there was thousands of people going to be here, and I'm one of the headline speakers. And I know I have to do this, but I can't move. Now, I finally kind of crawled away, and I don't know who gave them to me, whatever, but somebody gave me about 4 Vicodin. I took them, and it was off to the races. So I told that to the seminar when they first got in there, and we all laughed a lot. But I said, I'm just telling you, I can barely walk, but we're going to have some fun. I don't know if we're going to learn anything, but one way or the other, we're going to have fun. I've been on KRLD for a long time, and it's amazing. When you go to these seminars, you'll see the people with the other stations.
Right.
It's not everybody kind of likes each other now. It's not like, but back in the day, boy, it's kind of like football, NFL football. Mm-hmm. You know, now they're all friendly. They all love each other. You know, back in the day when, Randy White was out, they hated the other team. They wanted to kill them. They were, bite them and punch them, gouge them in the eyes when they got piles. They hated them. And that's why it was in the financial industry for a long time. But as you've been in it long, like I have, and a lot of the other ones, you just appreciate some of the people that have longevity. You kind of appreciate, you know how many crooks are out there.
Right.
Day trading, this and that, and they got this different, cruises for, they're crooks. And so you start, it's like I was talking to one of them, I'll not mention the name. They're on this station and many others. But I was talking to them and said, think about it. We're some of the guys that are good guys. Otherwise, they're going. If we don't do these shows, they're going to go to one of these people and lose their money or whatever. Be flim flam, man. Remember they're all selling those life settlements for years.
Right.
I mean, half the radio shows in Dallas talk about life settlements.
Weren't those also called? Were those viaticals?
Viatical settlements.
All right,
that's
there
right.
we go.
What happened is everybody lost all their money on viatical settlements about 10, 15 years earlier.
Right.
So they go, okay, how are we going to sell this thing? Because it got a bad name. If they just Google viatical settlement, it's going to look bad. Let's call them life settlements now.
Right.
And that's all they did. It's the same thing they did when they used to be called junk bonds.
I was just thinking that.
Michael Milken, the junk bond king, with his big X desk.
Yep.
Nobody wants to buy anything called junk. It's a terrible marketing plan. But something called high yield bonds, high yield, everybody wants something that yields a lot, right?
It sounds enticing.
That's right. Everybody wants to do something high yield. Nobody wants to buy junk. That sounds terrible. It's the exact same product. There is no difference between a viatical and a life settlement. Now, I had a life settlement salesman try to tell me there was. Oh, no, they were only investing in AIDS patients back then and blah, 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 and then the AIDS people got normal lifespans. I was like, Well, since that life settlement deal, they found one doctor that they paid millions of dollars in Denver. This basically signed everybody's got a 4-year lifespan. Wall Street Journal did an article that said in 15 years, 90% of all the people they saw were still alive. Now remember, you only make these great returns if they die within 4 years. So you're either losing money or you're doing something even morally terrible. You're hoping somebody dies.
Right.
If they don't die, you're like, dang it, that old man didn't die again. That's why I never did them. They brought their whole dog and pony show from Waco. That's where they were headquartered. The biggest one in the world was headquartered. Right. And I said, I will never sell death. I can't do it. I have a hard enough time with a life insurance policy. Somebody needs it because it's selling death. You know, I got to have it because, you know, I'm old and I've had cancer before. And apparently they don't want to give low premiums to people who had cancer before. I think that's discriminatory, but I'll take it up with the insurance board. But that's the way it is. I want to talk something today about something that is kind of near and dear to my heart. We developed this pamphlet for all our KROZ listeners, all of our clients, everybody out there. All right, I call it My Family Love Letter. Now, My Family Love Letter is a letter to your heirs, your wife, your kids, or whatever. It's more than a letter, but that's the first part. They're going through enough hell because something happened to you.
Right.
I don't want them to go through financial hell as well. Okay? So I'm going to give you a couple of reasons why I developed this particular pamphlet that I think everybody I know needs a copy. Mm-hmm. My brother died of Lou Gehrig's disease years ago. He was a paramedic in Tyler. His wife was a paramedic in Tyler. Okay? Lou Gehrig's disease, if you know anything about it, it just starts shutting down things. Mm-hmm. You know, he woke up one day and he was stuttering. I happened to be at his house that day. And of course, as a brother, I'm making fun of him. Like, why are you studying? He's, I don't know. I go, that's weird. It is weird. So he started things, and then, like I said, he was a paramedic. He had one child with his current wife, and a previous wife had 4 children. And so his wife, like any good wife, when he can't do things anymore, she started paying the expenses, paying the bills. They had multiple accounts, you know, checking accounts and all that. So she closed out all the ones that she wasn't familiar with and just started using the one.
Right.
Paying all the bills. And then it just got worse and worse. So, you know, he passed away. The problem was this. She didn't realize that life insurance premiums were coming out of that to have all the kids to go to college. Right. All 5 kids. She didn't know they were coming out of there. It's a small town outside of Tyler. Everybody knows everybody. Like ex-wives and current wives don't get along maybe. So you don't want to, you know, so maybe the bank account had everything going to a post office box or whatever. But it wasn't because my brother, these kids, I think only one of them went to college. But it wasn't because my brother didn't plan for his children. It's they didn't know it existed. They had no idea these policies existed. Otherwise, you certainly, with Lou Gehrig's, would continue the premiums. But that's one thing. People just don't know things are out there. You know, there's all kinds of little things. Like sometimes you get an accident. There's credit cards have an accident policy built in. I'll tell you another thing. I buried my grandmother and found out that she had a burial policy. Didn't know they exist. I think they had the plot already though.
Yeah.
But it's the other stuff. But that's why you got to tell people where this stuff is. You'd be surprised. You know how many wills and trusts I've read over the years? Tons of wills and trusts. They don't tell you the location of anything. They say, I have this, blah, blah, blah. What this family love letter will be, it gives you the location. The documents are located at. Like, what if you have a post office box? And you just call the bank and say, I think my dad had a post office box somewhere at Bank of America. You don't know what branch, the number, where's the key? How about the safe deposit box key? How about the safe to your house was a combination. What about your passwords to the computer? All of these things need to be in one location. Now, I have 4 children, ranging from 32 down to 9. Some children I can trust with this thing. Other children, I'm not so sure. I'm just kidding. I'm only kidding. Kind of. So you just tell them where this is at. I'll give you an example of what's in this. Okay? Your estate planner. Here's the name, the phone number, the address, email, fax, estate attorney, You got here's where your investment. Let's say you've got a CPA. You got an insurance advisor, because you never know, there might be insurance policies that immediately help you with the funeral and stuff. I'm a veteran. There's all kinds of veteran things that could help you with that. And so you got to make sure that they know where all of these are, all of these things in one central location. You can get your copy. We'll talk more about it after the break. But you can get your copy at 972-715-2424. Again, 972-715-2424. We have a break coming up, folks. Stay with us. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, where your investment strategy is always based on facts instead of some sales pitch. Here's Victor McClure and Guy Allard.
Welcome to the show. Guy Allard has been replaced by Sarah Meyer.
Yes.
Maybe permanently, I'm not sure. I'm only kidding. I'll be back next week.
I've been asking you. I've been asking to just be on the show. About time.
I know. So, you got to have like a giant voice or something. Yours not bad, though. You're not bad.
I try.
All right. We're talking about the family love letter. Remember, you can plan all you want for your demise or incapacitate if you get incapacitated, right?
Right.
But people need to know what you have out there. And this is beyond a will or a trust. It's okay to have wills and trusts, but you need to have something in between. Where are these documents located at? What kind of things do you have? Here's all the different things we have. Let's say someone owes us money. Well, I want to forgive that if I die. Well, I don't want to forgive that if I die.
Right.
I want that loan to go to so-and-so, to Jeffrey the child, or Jeannie the girl, whatever. Mm-hmm. And so you have that in here. So it tells remember all your financial people, all the people, your attorney, your financial advisors, all those kind of things. And wealthy people, a lot of times have several.
Right.
Well, you put them all in there because you don't want to miss anything. I've been doing this for 30 years. I've had people call me 20 years after their family member died. 20 years. And this is not just one time. Many times. I think he had an account with y'all. Mm-hmm. And I'm like, 20 years ago? Mm-hmm. He died 20 years ago? Mm-hmm. We don't have the paperwork for that.
Right.
But so the family love letter tells you where things are located at. It talks about your true intentions. It have like the date of your last will. Let's say something happened to you, and your heirs are trying to go through a will and they're saying, okay, but wait a minute. This says the will is redone in 2017. We have a 2015 will. We need to keep looking. Okay? We got to be accurate. So I'll tell you the date of your trust, the last date of your will, when things were updated. Here's a different investment. The contact person for that investment, the phone number, documents are located at. Okay? That's a really important one. Where are the things located? What is your safe deposit box number? The key, where is it? The combination to your safe, the combination to the passwords to your computer. Sometimes like I said, we had Dylan Gage, which I worked for decades. One of the owners there died of a rare blood disease. He was pretty young, in his 40s. And it took probably 2.5, 3 years to find everything.
Yeah. He
didn't expect to pass away. That's why you need the family love letter to put everything together in one place. Now, some people have this, like I remember I have a lot of engineer clients.
Right.
They'll usually have a spreadsheet. But the spreadsheet is not so easy to list unless you're an engineer.
Right.
Not so easy to read sometimes or to get into. I'm just saying this will be the My Family Love Letter. We'll be more than happy to give you a copy. Call us at 972-715-2424. Again, 972-715-2424. It even has your liabilities. Remember one thing: if you inherit inherit something from your kids to your kid, if they have credit card debt, you do not have to pay it. Now the estate might, but you don't have to pay credit card debt of yours. I've had debt collectors call customers. Their parents died; they didn't have any money. They said, well, aren't you going to take care of their credit card debt? And he was about to do it. I said, oh, wait a minute. You didn't sign that agreement with Citigroup, whatever. They did. You're not responsible for whatever they put out there. That's just a part of doing business. This tells you your liabilities. I'm also a guarantor in some debt. Here's all the credit cards and the web address, the username, password for the internet so you can go on there. Here's all your insurance coverage. Remember, my brother died of Lou Gehrig's. 5 kids didn't get anything, not because he didn't fail to plan. He did plan. But when he got Lou Gehrig's, he got incapacitated. They didn't know it existed. And so somebody somewhere, if something happens to you, don't have to die, but just get incapacitated, somebody's got to know, hey, pick up this My Family Love Letter, and this is going to help you through a very, very hard time. Because everything's gone crazy. You just don't want financial heartache for your family when their emotional heartache is off the charts. So do them a favor. Fill out the Family Love Letter. Tells all the insurance policies you have in force. You know, when you work, people forget the little, it's not usually big, but the one you got at work, that's something people forget all the time. And I'm telling you one thing, folks, the insurance company is not going to call you and tell you, oh, by the way, you know he has the insurance policy? Where can I send the check? They hope it lapses, right? They hope they never have to pay. But you're gonna have this Family Love Letter filled out, and so they will pay and help for the funeral and all that stuff. Because sometimes it's just getting cash quickly. You know what I mean? You eventually it'll go through will and probate process possibly and all that, but that could take a while. And they need the money to bury you now, and they don't want the cheapest coffin in the joint. They want a good one. And so all of these things, you got prenuptial agreements, postnuptial agreements, living wills, tells you the date they were signed, where they can be found at. Okay, believe it or not, everybody doesn't keep everything in one place. I know it seems weird, but they keep things in a lot of different places. And here's another thing. I may receive an inheritance from. Your parents may have a rich uncle or cousin. You don't really know about them. But that's going to go to you if they predecease you, possibly. So they're going to put it all on there. All right. I have ownership in following businesses. A lot of times it's not a bank account. It's not anything else you can just see stock in. It's just a part of a business. And so, well, I need to know that because my heirs deserve that, right? So here's all the different things. They'll tell you the last date of your will, your internet, Social Security number, Medicare number, passport numbers, all of these different things. Let's say you have a religious, last thing you want to do religiously with your family or whatever. Put it in there. It's got, like I said, event of death and the event of incapacity. This happens more than just sudden death. All of a sudden you can't do anything and nobody can get to your stuff, and now they're going through all kinds of heartache. Oh, we got a break coming up, folks. It snuck up on me. Stay with us. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by 2 of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
I think experience is another word for old. What do you think?
Experience, yes.
I don't look old. I keep the plastic surgeon doing my tongue. I'm just kidding. I've never had plastic surgery.
I'm not going to comment.
I do have stress headaches. It gets Botox in the back of my neck. Now, the back of my neck looks like an 18-year-old Swedish teen. I got to say that for sure.
Sure. Yeah.
Never had anything in the front, though.
Sure.
We're talking about the Family Love Letter. Remember, the Family Love Letter is telling if something happens to you, you get incapacitated or you die prematurely or suddenly, telling you where things are. Hey, I've got these insurance policies. Hey, this credit card, if I died in an accident, it's going to give you another $100,000. All of these different things. I've got life insurance here. I've got long-term care policy here. All of those different things. And more importantly, it tells you where the documents are located at. Wills don't tell you where things are located at. They just start naming off assets. This tell you, okay, this asset is here. Or the combination of the safe is this. It's in the safe. The safe deposit box at Bank of America is right here. This is the number. Here's the key.
Password to the computer.
Password to the computer, everything. This will you can also use a part of the My Family Love. This is the thing we developed at McClure Capital that we all of our clients, all of our KRLD listeners, we want you to have a copy. It's My Ethical Will. Here's another piece of it. When I'm gone, I hope my family will learn from my experiences and they can write something there. I believe that the most important things in life are. The most important thing I've done in my life is. But these are things, like I said, besides just the actual, here's my policies and everything else. This gives you a little more. Everybody that I've given this to, I don't say everybody, but I'd say 80-90% want more for the relatives when we give it. Right?
Oh, absolutely. We get requests all the time.
Oh, yeah.
Yeah.
So if you'd like a copy of the My Family Love Letter, help your relatives if something happens to you. It's better than a will or a trust. It's that bridge, that gap between those two.
Mm-hmm.
And a will and a trust, a will usually is not going to, if you're still alive, it doesn't come into play.
Mm-hmm.
You need this. Call me at 972-715-2424 and just request a copy of the My Family Love Letter. Again, 972-715-2424. Okay, we'll go to our next topic. No more of that if I get incapacitated crap. What if I live to 150? Now that's the subject that I want.
That's the extreme.
That's right. It's like if I'm healthy, I would love to live to 150, but if I'm really bad off in a nursing home, I don't want to be. Don't be wheeling me around with a straw. I don't want that. I say that now, but even when I get older, maybe I will, I still want to see the grandkids on weekends.
Everyone is living longer now. I think it's inevitable that we're going to get to those very extreme ages as a common thing.
Oh, the life expectancy of a man has increased like 30-something% the last 30, 40 years. A woman's increased like 17%. I just love that old joke. Why do men die before women? Because they want to.
That's so awful.
They surrendered finally. I'm only kidding, ladies. That was a joke.
That makes me not want to marry at all, Victor. You do realize that.
Well, I'm an expert. You know that.
Yes, we know that.
All right. Let's talk about something else that's very important. The family love letter is very important. What's another thing that's important? Less than 5% of people in the United States have a written retirement plan. Now, when is too early for a retirement plan? Never too early. If you're within 20 years to retirement, so if you're 30, you're going to retire at 50, or you're 50, you're going to retire at 80, whatever, you need a written retirement plan. Because there's so many different things you need to factor in to see, are you on the right track? You've heard me say this 1,000 times if you heard me on the radio for 20-something years. The one thing I don't want to do, I don't have to wake up when I'm 80 and I screwed up something and I'm opening a can of Purina. I don't want to eat cat food when I'm 80. That is my thing. I don't want. They used to have a commercial like that or something. That was really funny.
What commercial was that?
I can't remember, but it's like an old person looking at cat food or something like, oh, that's a great one. So I've borrowed that line 30 years ago, and I've been using it ever since. One of my listeners for a long time, they said, I want to get a T-shirt that says, Victor McClure, you don't have to eat cat food or something. I go, yeah, that'd be funny. But the written retirement plan is not what most of the brokerage firms give you. My cousin works at Fidelity, and it's they're good company. I like Fidelity, but their retirement plan isn't really based on anything. It's based on average market return. So they plug in your stuff, you plug in your expenses, say the average market return, you'll be this. If it's above average, you'll be this, and if it's below average, you'll be this. The only problem is a black box. What are they using for average? Are they using 10% average for the stock market? When I know the market's made less than half of that the last 18 years. It's less than 5% the last 18 years. So wait a minute. What are they using for below average? Are they using 7% return on the below average kind? If that's the case, this is way overblown. I need a below average, a super below average, just to equal the last few years. And we'll talk about that when we return from the break. Stay with us, folks. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome to the Common Sense Investing Show, the home of plain-spoken, no-nonsense answers to your financial questions.
Welcome back to the show. What we're talking about before the break, folks, is a written retirement plan. Every single human being needs a written retirement plan. Unless you have like $500 in the bank, then you can't really. You already know the situation.
It's still good to have a plan. You need to still have a budget.
Not much you can do with that. I'm just saying. But what you have is, we're talking about the Fidelity plan, which is it's better than nothing. But that's not really a written retirement plan.
Right.
All that's giving you is some scenarios, but it's a black box.
Right.
They don't tell you what if the market makes under your below average, like it has for the last 18 years. Well, I don't know what those numbers are. What are they using for inflation? Are they using a conservative number or an aggressive number for inflation? What are they using for your portfolio mix? Are they using a conservative or aggressive portfolio mix? All these things, 'cause even if they say the average for bonds, you know what the average for bonds has been in the last 50 years or whatever? Like 8%. You know what bonds are making now? 3. So wait a minute. Below average, we have gone so far below average, I don't trust anything that I can't actually manipulate each number. Our retirement planning software, you can manipulate every single number. Inflation for every single number. I'll give you an example. Inflation on food is nowhere near 2 or 3%. Otherwise, right now, a carton of eggs would cost you about $200 a carton if it had gone up with inflation for the last 30, 40 years. That didn't happen, thank goodness. But some things go up way more than inflation. What about medical costs? Insurance costs, stuff like that? It's had a 7% inflation. 7%. It's been higher than that before, too, by the way. So have you factored in, when you're retirement planning, 7% inflation on your medical expenses? Or them means testing Social Security to cut that and to increase the amount that you have to pay for Medicare, Part A, Part B, stuff like that, because you make too much or you work too much. Have you factored that into your retirement plans? That's exactly what we do. We have the most comprehensive financial planning, retirement planning software in the business, and I've seen them all. And what happens is they're giving you rough estimates, because what they want to do, when you if you had a financial advisor for a lot of years, he wants to calm you down. Just say, all right, look, you're fine. They're not going to tell you really what that means. You're fine as long as you stay the course. You're fine. I'm like, wait a minute. What if happened to 2008? I retire and it goes down 50% right after retiring. Paycheck's gone. Am I okay then? I can tell you right now, you're probably not.
Right.
Unless you're pretty safe stuff. But this retirement plan can. You need to stress test your portfolio. You don't go on averages or what you expect good intentions of the market. In other words, if it makes 20% a year, well, you don't need a plan for that. If something makes 10 or 20% a year, you're fine if you saved anything at all. So, but that's not a plan. That's a hope. I hope I'm not starving to death when I'm 80. I hope my advisor was right. Think about it. Do you want your retirement plan based on what the market will or won't make? If your advisor is right or not right. He could have retired 20 years before you run out of money. He's gone. Nothing he could do, right? I don't want somebody's opinion or what the market will or won't do to dictate my retirement.
Exactly.
My retirement is based on just the numbers and their stress test. So if something bad happens, I still don't have to eat cat food when I'm 80. I will still never run out of money. I will still leave money to my heirs if that's your purpose. Remember my purpose? I said, kids, I have 4 of them now. I said, you're welcome to every dollar that Daddy doesn't spend. Just hope I don't have to move in with your butt. And that is my philosophy. But I do understand other people have different philosophies, that they want to leave a certain amount to the kids. Now, don't be wrong. If I slipped on a banana peel walking out of this joint today at the Star, I surely want my kids to get what I got. I don't want anybody to keep it. I don't want the government to keep it. I don't want an insurance company to keep it.
Right.
Nobody keeps it.
Right.
But if I live long enough, like I said, just hope I don't have to live with you.
Right.
But I understand the other. So written retirement plan is one of the most important things you could ever have. I don't know how I can emphasize it more. What you need to do is you need to factor out, what about in taxes? Let's say you did one 5 years ago. Well, the taxes just changed. They need to be updated with new taxes. They need to be updated with each individual thing. You need to raise medical expenses, housing price. Remember, I've seen really simplistic ones that'll put a 3% inflation on principal and interest on your, principal on your house when you're paying a mortgage. Yeah. There is no inflation on that. It's the dumbest thing I've ever seen, but it's just a blanket program, black box. Excuse me. Ours can see through all that. You're actually going to get a real retirement plan based on, okay, these kind of investments, we stress test these. We stress test these. It's on your exact allocation. We'll use your exact same Social Security numbers. We're going to optimize those Social Security. We have a Social Security optimizer. It's one of the best there is. There's like 700 ways to take Social Security. It'll show you in your particular situation, with your work history of you and your spouse, here is the way you should take it, and here's why. We include that no charge. And so you got a written retirement plan that shows you exactly to the penny how things will go if it's stress test. You want to stress test. Every time I see a so-called retirement plan that says if you make 10% a year, you're fine, I'll go, they can't believe that, right? The market hasn't made that in a long time. You know what part of it is? The market always made about 5% dividends for almost forever until like the 90s. And the growth on the market was never more than, say, 5% or so. Never. So you had a 5% dividend, 4 or 5% dividend, 5 or 6% growth. Well, we don't have dividends are way lower now. And so even with that, the growth was the same. You're talking about maybe a 6 or 7% return, which is still 20, 30% higher than it's actually returned this century, which is 4.97% with dividends, and that's it. So we're talking about a written retirement plan. We offer these at no charge, no obligation. It will be the most comprehensive retirement plan you've ever seen, and you can see if there's any potential issues down the road. You'd rather know about them now than learn about it when you're already retired 10 years in. Call us at 972-715-2424. 972-715-2424. Excuse me. We got a break coming up, folks. Stay with us. You're listening to the Common Sense Investing Show on News Radio 1080 KRLD.
Welcome back to the Common Sense Investing Show, hosted by two of the most experienced advisors in the DFW Metroplex, Victor McClure and Guy Allard.
Welcome back to the show. I'm Victor McClure. Guy is on hiatus. Sarah.
I'm stepping in.
My executive assistant is helping out.
Are you okay there?
I'm telling you. Almost had a coughing fit right before the last break. Thought I was going to croak. I might need my family love letter we had earlier. Better make sure mine's filled out.
I keep telling you guys you're going to work yourself to death. And I keep warning your wives. I really don't want to find them when I walk in first thing in the office laying on the floor.
Oh, no. Many times I'm a workaholic. You don't show emotions.
Oh my goodness.
Now, we're talking about the written retirement plan that we offer at McClure Capital. It is the most comprehensive retirement plan I know. The other ones I've seen are a black box that don't show anything. We're going to show you the exact taxation of your portfolio. Let's say you've got some municipal bonds that aren't taxed. Let's say you've got some tax-deferred stuff. Let's say you've got RMDs, and the taxes on RMDs are required minimum distributions. When you're 70 and a half, the government will make you start spending down all retirement accounts. They will increase the amount you have to spend until you die. So there's taxes due on that. Our program will factor in all taxes to the penny. The only thing it can't do is, it usually doesn't matter. When you're retired, usually you don't have a giant mortgage, hopefully. Mm-hmm. So you don't have a bunch of write-offs. So the standard deduction, I think, is like $26,000 now. So that'll cover 90% of everybody. That's the only thing my program can't do. It can't know that you have business losses of $10 million a year that you got to take out of there. But for 99% of everybody, it is the most comprehensive system in the world. There is no cost, no obligation. What we'll do is we'll put your information in there. We'll stress test it, put the correct inflation for medical stuff, for food, take off inflation from principal and interest on a mortgage. All of the things that these black box retirement plans, remember, less than 5% of investors actually have a written retirement plan. I'll talk to you. I got one. Okay, let me see it. I don't know what it is. I just got this report that said I'm doing fine.
A report.
That is not a report. I mean, that is not a written retirement plan. Remember, your retirement plan should have nothing to do with the stock market. If the stock market makes 20% a year, you're doing great. If it loses money, you're eating cat food. That's not a plan. A plan says, well, no matter what the market does, no matter what interest rates do, no matter who's in office in the White House, no matter what's going on geopolitically in the world, I don't go broke. And that's what you need. And if let's say we discover an issue, you want to find out now versus later.
Absolutely.
You don't realize how many people over the years, we've been doing this 30 years. People come in and they go, I'm going to retire right now. I said, okay, what do you got? $1 million. Okay, all right, pretty good. All right. How much you spending? $100,000 a year. I was like, okay. He goes, yep, if I make 7% a year on the market, I'll be fine. I'm like, 7%. Now, you could be retired 30 years, right? He goes, yeah, 7% I'm fine. And the one thing they forgot to factor, inflation. So that's $7,000 a month of bills. In 15 years is $14,000 a month. They haven't planned for that at all. So we show a plan, hey, you're running out of money X when you're 80 years old and you're retiring at 67. And remember, the numbers never lie. People can lie and mislead, but the numbers don't. And if you find out something like that, especially the earlier you find out, the cheaper it's going to cost you to fix it. And there are always things you can do to get yourself a better hand. Always things. So, and we are experts in showing you what those things are. We're going to show you, okay, here's the issue we have. Unless the market makes more than 5% a year, which you can't count on, you have a potential to go broke at a certain point. Mm-hmm. And I've heard people say, well, nobody in my family's ever lived that long. It doesn't matter. We're living a whole lot better. At the turn of the century, at 1900, the average life expectancy for an American, which we're pretty high actually, worldwide, was like 43. So, remember when they came out with Social Security? That wasn't that long ago. They said, let's start it at 65. The life expectancy is only 65. So what do you think it's going to be in 20 years? Let's say you're 60 now. When you're 80, life expectancy is going to be really high. I'm telling you, the family love letter you need if you get incapacitated or pass away prematurely. The retirement plan, the written retirement plan, the most comprehensive one I've ever seen. Every single variable we can adjust, and that's what you want. Is those two things in conjunction. If you have them, they've actually done studies. The people that have actual plans, not some broker just saying, no, you're fantastic, you're doing great. They are like 75% more comfortable with their retirement. 75% more. Because I'm telling, there's a financial aspect of retirement that everybody knows, but there's also the psychological aspect. Let me tell you this: if you have 100% stock, you saved $1 million, you retire, and 6 months later that market drops in half. Even if logically you probably can't run out, psychologically it's going to be the worst retirement you've ever had. So you have to account for those. If I know I have a written retirement plan that's taken in all the variables, it's stress tested the portfolio, so even if things go bad, I'm still okay. That's the way to have a good retirement. That you know, I'm not going to run out of money, no matter, I'm not going to panic. It allows you, just in your market piece, your growth bucket, you can stay in it a little longer, because everybody does the same thing. They sell when it starts going down, and they don't buy until it goes way back up, so they lose that whole rebound deal. That's human nature. That's why, remember we said the market's averaged 5% the last 18 years? The average person has made 2.5 because of just that, emotion. When you have a written retirement plan, you don't have to worry about it. You can take out some of the emotion. Money's always got emotion to it, but you can take out a lot of it, and your success ratio goes up tenfold. That's our show, folks. I want to thank everybody for listening. Remember, if you like if you like our retirement analyzer, the most comprehensive retirement plan out there, there's no cost, no obligation. Call us at 972-715-2424. If you want a copy of our family love letter to help your heirs if something happens to you, again, 972-715-2424. I'm Victor McClure for Guy Allard. Always appreciate your time.
The preceding show is paid for by McClure Capital and is for informational purposes only and not a solicitation or representation of any particular investment product or service. Any views and opinions do not constitute financial, legal, or tax advice. Consult with your appropriate professionals before making any investment or savings decisions. Always consider your risk tolerance, time horizon, and objectives in making any financial decisions. There is never any guarantee of future success or performance.